We have a philosophy, and that's mortgage lending made easy.
We list it, and then we're in it together, like a marriage until it closes.
Hello everyone, welcome to Up to Date Real Estate with David and Claire, and I'm David.
I'm Claire.
Hello Claire.
Hello, David.
Today, I wanted to talk a little bit about people who are buying real estate, buying homes, the types of financing that are available, and what can real estate do, and why should people buy real estate? So today's market, rents being what they are, buying being what it is, would you say that it's easier or to rent, or is it easier to buy right now? What do you think is a good idea for people in the market right now?
Do I think it's easier to rent or buy?
Smarter to rent or buy?
I think it's smarter to purchase.
And why is that?
Well, because it's yours, you get to own it, it's an investment, it's yours, you get to do what you want with it. When you rent, you only own the contents inside. You can't, you can do to some degree, but what are you doing it for? You're only making improvements for the landlord.
Well, a lot of people like to rent because of the temporary nature of renting, and they're thinking they're not going to stay very long. And I happen to agree with you as far as the buying is concerned. There are times when prices of real estate are very high and interest rates are very high, and maybe renting becomes a better option. The rent versus buy argument has been around for a long, long time. And buying, right now in Connecticut specifically is because the values are still low. I think they're undervalued when you put them in perspective with a lot of property around the U.S. In Massachusetts, you have going from the eastern side of Mass and all, of course, down into New York, the prices are significantly higher for properties of similar size. And the rates being what they are right now. Now, we've gone through a few changes in rates. And right now, the interest rates for people for FHA through conventional and beyond, those are ranging from the high 3s, 4s, up to 5, 5.5s. Those ranges depending on your credit situation, whether or not you pay mortgage insurance, if you have lender-paid mortgage insurance. But even still, if we're having a conversation where rates are hovering, we'll say on averages, and about the 4.5, 4 to 3/4, that's a very, very low price to own. To borrow money is very cheap, and the prices being cheap, I agree with you that buying is a good option, the better option right now.
Well, even if you just simple terms, just simply, if somebody's going to rent a place for 5 years, which isn't that long because life goes by very quickly.
Sure.
If you're going to rent a place for 5 years and then you're going to move, when you're moving after 5 years, what do you have? You're just packing up what the contents are within your 4 walls. After 5 years of living in a place that you've owned, you're going to walk away with some money. That's the difference.
Yeah, and that's really, I think, in Connecticut, what has been largely missed. We've had throughout history, you look at it, back in the 70s, you could buy houses on average, a house cost you maybe $30,000, $40,000. That same house today is worth about $170,000. That's what it is in this area. And various other areas that it's not quite the same, but it's pretty consistent. And and over time, the idea is that real estate builds value, therefore builds your personal wealth, and helps you to gain a little bit of security as you're moving forward. Now, I think what a lot of the maybe the thought has changed in that what happened when we had the real estate crash, and we had 2 of them, significant ones, obviously in the late 80s and again in the late 2010s, the 2000s, between 2008, 2009, in 2010, and values have gone down significantly and are stagnated to a certain level. But even that being said, even if you take those prices today, take away the spike that was from 2005, 6, 7, if we take that spike out and go back to 1999, you're still on a significant upswing.
But it shouldn't be a surprise if you go back and look at real estate history and you look across the country. It happens. That's what happens. It goes in full circle that way. It has to. It has to hit bottom, and then it regroups, and then it rebuilds, and then comes back around again.
Sure.
It happens all over the place.
Sure.
It has to be done.
Well, it's just like with the stock market, but I'm not going to get into that point. But, I think one of the major ways you can really look at the value of a home and whether it actually is holding value or rising in value, et cetera, is going to look at the cost to build versus the cost of the property itself. If you're looking at a property, it's valued less than what it would cost to build that same property, then you realize just by nature that the property is undervalued. And if the entire area is selling for less than what it costs to build, that's when you have builders slowing down. That's when you have property that's very obviously undervalued and will increase in value because new houses will be built and people will continue to buy and sell real estate. And that's going to change things. Now, with that being said, people often, consider, well, how do you buy a house and what tools by which you can use to buy a home. Connecticut Housing Finance Authority, which is the CHFA loans, the state bond programs. You have the FHA programs, which are the Federal Housing Administration, that offers out different types of insurance for buying homes. You have USDA, which is a rural development program, which allows you to buy homes outside of the city limits. If you have a specific population density less than a certain amount, you will qualify. It's an income and geographically based program that allows you to buy property outside of, say, for example, we're in Manchester and Vernon, those are considered cities. But if you go into Bolton, Coventry, Tolland, those are considered rural areas and allow you to buy a property at 100% financing. And that's another great program. You have conventional programs, Fannie Mae, Freddie Mac, other types of programs for people who are looking to build their real estate portfolio and to build their own wealth through buying properties. And because properties are undervalued as a repaired value right now, to buy something that's a little bit less than that, meaning that they have to be repaired, it's even better purchase. And you can buy through commercial type loans, which means you can buy a property with a fix and flip, maybe a property that needs what are some of the common things that could be repaired? Kitchens, bathrooms, siding, like peeling paint on the outside.
Yes.
A lot of times those can't get FHA financing. They have a difficult time selling. Depending on the area, you can buy a property like that less than market value, put some money into it, put it back on the market and sell it for a profit or to hold and to rent. I do have clients right now who are building their portfolio and to acquiring more and more properties for the idea of creating these assets. And the difference between an asset and a liability is if it's costing you money, it's a liability. If it's positive, it's an asset.
Yes.
So, and real estate can have it's a two-edged sword. It can be an asset or a liability depending on how you buy the property and whether you can rent it.
Absolutely.
So in your opinion, being a multiple property owner yourself, do you think it's better to have a multifamily, a single family? What has been your experience of that?
I think that it just depends on what your comfort level is. I think that I tell people if they're just starting out, sometimes it's easier to start out smaller, one family, single family, one unit, one bedroom condo. So you see if it's something that you want to do, something. Everybody thinks that it's very easy to do. It's not. It's time consuming, and you have to see if it's something that you want to get involved with. It's paperwork, it's kind of being at someone's beck and call.
Well, risk analysis.
Yes. So I always tell people to start out small. If you start out big and you start out multifamilies, you start out, 2 bedrooms, 3 bedrooms. Now you have to be careful, because now you have to, there's all protected classes you need to be careful of. If you're just starting out with a 1 bedroom, then that's a 1 bedroom unit. You're not going to get 8 people in that unit. You're safe. It's manageable. It's something that you can have control of easily. So that's why I tell people to do that.
So starting off with a smaller investment, make a flat, a condo, or something like that.
And that's usually 1 parking spot, as opposed to if you're in a 2-bedroom condo, there's usually 2 parking spots. Sometimes people always want to bring in a 3rd car and put it in a visitor parking spot. Can't do that. So it's just a way to get in to find out if it's something that you want to do.
And I would say maybe even a condo is a great idea over a single family, because of the fact you do have managed property. So the condo association takes care of all the exterior, meaning the snow removal, the cutting of the grass, the painting of the building, the roof as it needs to be replaced, those kind of things that actually are one of those line items that through condo fees can take care of that as a whole. And it saves you from maybe having to hire on a property management company, right?
Absolutely, and I wouldn't, if you're going to be, if you're going to invest in properties, I would make it so it's manageable. I wouldn't hire a management company, because then I think that's going to take away from your profit line. I think that I would just do it so it's manageable to do it.
Okay.
Absolutely.
Okay, so then you would say you would want to build up. I think the biggest thing would be that people hold reservations because they are scared of what happens if the property doesn't rent.
That's where you have to look at the property and make sure that it's something that'll rent. So it has to be pleasing when you see it. Will it be something that you would rent?
Would I rent this?
Yes.
Yeah, sure.
And is it close to a college? Are you going to be looking to rent to college students? A lot of the multi-units near the colleges rent very quickly because a lot of parents would rather rent off campus because it's cheaper. And a lot of them co-sign
Sure.
the leases.
Okay.
But
Which is
just,
an added layer of security.
yes.
Okay.
But just like, kitchens in a multifamily or a single family, is there cabinet space? Is there a garage? Is there basements? Makes it that much more appealing. You can get higher rent if there's a garage.
Sure. Okay.
So I know people who rent out garages separately from a unit. So that's added income. So
With the
there's-
places that are close to bus lines and so forth, and other places in the complex, so if someone doesn't have a car, but someone else in the area does have a car, they can also rent.
Yes.
That's smart.
So
Segment
there's
it.
yes. So there's all different ways to do that. So if you can see yourself renting a particular property, then most likely it'll rent.
Okay.
Yes.
All right. So again, and for those types of properties, talking to a mortgage person, you want to be coming into something like that with at least 30% down. I mean, so if you're buying a condo for $100,000, you'd want to come to closing. You want to prepare for about $35,000 to $40,000 all in for attorney's fees, inspections, appraisals, closing costs, and the 30% down to the value of the property. Safe to say that's a good measurement of what you should expect to make a purchase. Now, there are other programs that are pretty aggressive that allow you to buy with higher loans to values, and there are a few that will allow you. There are some programs that are available through Fannie Mae which will allow you to buy single families homes and repair them if you buy them in disrepair and hold them for rental, and it's a lower
But I
down
want to
payment.
add too, though, but just if you're going into to buy a property for an investment and you're not coming out positive the first year or the second year, maybe you're having to add in maybe $40, $50 a month out of your own pocket. That's not such a bad thing, because you very rarely come out positive
Okay,
the first couple of years.
okay,
But that's not, I mean, it's not a bad thing. And so, and if your condo's not renting or your apartment's not renting, if you drop the rent, maybe by 50, maybe by 100, the whole thing is to get somebody in there. Because if you're going to hold out for months for that particular price that you're looking
Sure.
for, you now are paying condo fees, you're paying taxes, you're behind.
and it gets worse as time goes on.
Yes.
So
And you-
rather than losing the 18, say it's a $900 a month carry, instead of losing $1,800 in 2 months, you rent it out for $100 less, and you lose 12 over the year.
And you want to rent from spring to spring.
Sure.
You don't want to rent in the wintertime.
Okay.
It's harder to rent when it's cold.
Interesting.
Yes.
All right. Any other words of wisdom?
No, that's it. That's all I
Okay.
have.
Bright and shiny. Well,
Yes.
thank you, everyone, for joining us today.
Thank you.
Have a great rest of your day.
Yes.
Please remember to watch us next time. And if you're seeing this on YouTube or another place, subscribe and share with your friends. Take care.
Thank you.